We are now at week two of the war. Oil prices are through the roof. Geopolitics is at its peak, and crypto is painting a picture we can't ignore. In this video, we'll break down what America-Iran tensions are doing to oil, what it means for rates and CPI expectations, and what market needs to confirm this week. Hello, everyone, and welcome to Strategic Markets, where we do our best to give you some fundamental and technical analysis. And you are in our start of week session over here today. First thing up on the news is oil has just opened up 19% higher after going up 35% last week. What does that actually look like? It looks like something breaking through the roof. Absolutely. Like when you have a look at this chart over here, this is crazy. Like if I actually ever had to explain this to someone in the future, I wouldn't be like, no, this was the event of America-Iran war tensions, because this kind of breakout is exactly what you expect from a geopolitical war. So if someone had a trade in oil, great job. You did amazing, because yeah, this is just a crazy massive breakout of it's just massive. So good job if you took on this trade. Now we've officially gone above $100, ranging at about $107 spot price. Where is this all coming from? Well, you heard it last week. It's basically because of tensions happening at the Strait of Hormuz, which is connected to Iran side with the Middle East as well. And basically, there's war going on between America and Iran, and any operations of oil transportation happening to Iran that go to Russia or China is currently being blocked. And therefore, tensions are growing. You can see over here that some of the UAE tugboats are being hit by explosions and sinking. China is bolstering its own naval capacity to get there, because China is heavily reliant on Iran's oil. Putin is threatening to withdraw Russian gas supplies from Europe relative to this particular news as well. And basically, vessels are being attacked in the Strait of Hormuz. While all this is happening, Trump basically takes a shot at the UK, saying, hey, the UK basically said, hey, we are willing to send two of our aircraft carriers to the Middle East. And, they're giving it some serious thought. They haven't confirmed it. And Trump is like, no, we don't need it. We have already won this war. So we don't need people to join us when we have already won this war. And like, you got to love this geopolitics, guys, because look, if Trump actually pulls this off, he's created tensions with Iran, and then by that, he's kind of found a way to squeeze China and Russia, because they're reliant on the Strait of Hormuz. And if he has created these tensions and somehow wins the war, has control or tension over China and Russia to negotiate better tariffs and somehow better the economy of America, great job. All right, he actually has my support if he actually pulls this off from a long shot. But if he doesn't, I can't even imagine what is going to happen to the stock market. So this is why one of the reasons why I'm actually following this geopolitics, because I'm really keen to see what he's able to pull off over here. Then another piece of important news, we had the unemployment rate came in. Look, it was estimated to be 4.3%. Prior was 4.3%, but the actual came in at 4.4. And what was the market that reacted to that? Well, relatively so, it was BTC crypto on the daily chart. You can see over here, we were ranging upwards. We hit my Fibonacci resistance level right over here. And then we started moving down on Thursday, and then we confirmed it on Friday once we got the basically the employment numbers on the 6th of March. So, and then after that, we have range bound back again in this particular Fibonacci level. And if any of you guys are wondering where I've drawn this Fibonacci from, it's basically from the 2022 lows in November of 15,000 all the way up to the highs of the 13th of March 2024 at 74K, because it very well told me the range that we're going to break through at about 110K above, and it kind of respected those Fibonacci terms. So yeah, this is where I've drawn it, and right now it's within this particular period. So I'm going to be tracking that. Now, for many of you know, I am a big crypto bull, and I love supporting it because I believe it's the future tech relevant to my particular time. And right now, when I draw a particular trend support line on a monthly timeline, so you can see this is Bitcoin USD on the monthly timeline, all the way from Feb 2019 to December 2022, all the way up till now, I actually see this particular trend line being supported. Now, except for the COVID-19 crash over here, we've come about over here. And I personally think that we do respect this particular trend line and start heading upwards from here. Obviously, that's my theory and support. In that being said, the month of March, even April, could have downsides of about 60K all the way to somewhat about 62K or 61K coming in March or April. So if this war continues on and tensions stay high, personally speaking, I definitely do see this particular area going down over here. So don't think that there's not going to be any downside at all, because there is. Maybe we even wick below it and start touching the high 50s or mid 50s. But if we can come back above this particular line, I don't believe then in that case we're being invalidated and we are in like a full-on bear market for a couple of years. But that's just my thoughts, obviously my own theory and what I'll be following. Do your research based on what you feel as though. And what are some other indicators and fundamentals that are showing me another story? Well, first of all, this just came out this morning that the Coinbase premium is exploding. And it basically means that US institutions are currently buying while retail is still scared. And whenever this particularly happens, this is a good move to say that, hey, they believe that the price is currently at either below fair value or at fair value for them to want to increase their exposure to it. That's why the premium is going higher. Another interesting thing is that Bitfinex Wales. This is a crypto exchange where you can go long or short on the price of Bitcoin. They've been increasing their long exposure very recently. And last time this has happened, BTC price went up all the way at 60K at some time around 2022. Again, when this particularly happened, we had loaded up a move all the way to like somewhat 111, 110K. Now it's happening again. So someone knows something in the market and they're positioning themselves in crypto. And like I said, in this particular area, where even though the Iran's war has just started, we're stabilizing the price over here. So something has priced this in, and they're taking this opportunity to likely load up in this particular area and then go from there. So we'll just see how that particularly goes. Obviously, that's my theory. Another asset that we really look at is Ethereum. And currently, Ethereum has 12 times more ETH shorts than longs, which basically means that if a short squeeze was to occur, there's about $5 billion worth of liquidity waiting at $2,500 worth of ETH as compared to just 300 million waiting at 1,500. So you can just see for the price to move $500 more up, we'd be shorting so much. We'd be short squeezing so many shorts and have so much more room to the upside. So for me right now, my theory is not to be bearish, even though everyone else is. I'm taking a contrarian bet, and I really hope that plays out. But on that, the other chart that we follow is Ethereum to Bitcoin power, which basically shows us altcoin strength, because Ethereum is the ultimate altcoin. And when that starts moving up against Bitcoin, most likely other alts will have strength too, which is a more risk on view. And we can see over here that it's recently in the last couple of weeks been stabilizing. It's not losing strength against BTC. You've got your, what's it called, MACD slowly, maybe likely coming to a bullish cross. We'll just have to see it or wait it confirm. Obviously, if the war goes even more to hell, then that's going to be concerning. But if everything plays on right now, we could be in a great position. Lastly, I think we just want to cover the macro week coming up ahead. This could be a little bit tiresome, in my opinion. We had the US CPI from the key inflation point. With the price of oil and all other things, yeah, I'm not really going to see this being great, to be honest. I don't know what kind of miracle is going to pull off for it to be less, but let's see how that goes. We'll also have jobless claims and the trade balance coming up on March 13th. Again, with the jobs report last week, I'm uncertain if there's going to be positive news over here. And then lastly, we have the core PCE, another inflation, Q4 GDP revision, and JOLTS job openings. Yeah, just lock in, guys. Like, I think if anything is going to be very interesting for the markets, I personally see it being red this week, but I could be open to be proven wrong, to be honest. Let's see how we go. And lastly, we have the Fed's rate event next week. So a lot of the data that we're going to get this week is going to decide whether we're going to have a rate cut or not. Now, they may see the news and see that things are going out of control, and to better benefit the economy of America, they might actually decide to cut rates. And there's a last minute event which actually pumps the price of the market because anything happens. Or they might actually see that the state of America is really bad and they need to keep the rates over here until it stabilizes. So I'm open to anything and everything over here. But all in all, I actually think we're going to have a reasonably volatile week. And on that, I'm going to pass it over to Steve to see where his technicals are and what he thinks about the volatility that's upcoming.
To take a look at Brent Crude itself first.
Yeah.
That was one of the biggest things that we actually did bring across a point of. So I'll start sharing with that. And we'll actually have a look at that first. And as you can see, that's a massive breakout. It really, really is. And is really taking off. So we were looking in terms of having a bit of a think and saying, okay, well, maybe this is a bit overextended. Having a
Mm-hmm.
look at that when we're having a squeeze at the charts earlier in the week, and thinking, okay, this might be a little overextended, and thinking this could actually be due for a bit of a pullback. It has not done that whatsoever. So always having a look at what the market reaction is more important than anything else. But as you can also see, if we take a look over at the moving averages, we'll do that first before we look at that Ichimoku curve. It's still pulling away even further away from these moving averages. Now, why am I saying that and why is that important? Do we recall a similar looking chart? Silver. Now,
Mm.
the most important thing to really recall with that was silver was going absolutely bananas like this as well. And when
Yeah.
this was going bananas and gangbusters going absolutely crazy, the implied volatility ratio was doing exactly the same. This is happening exactly the same in terms of USO, which is the United States ETF.
Mm.
And the same kind of thing is going on in the same way as what was going on with SLV, which is the silver ETF in the past. Before it did its absolutely crazy 30% drop in one day. Now, I'm not saying that crude oil is going to do exactly the same thing in terms of dropping 30% in one day. But when we take a look at what Brent crude is doing, it is going absolutely gangbusters and would
Mm.
more than likely revert back to the mean at some stage in terms of at least back to the short-term moving averages.
Yeah.
Now, chances are it may come back to what all of these big volume profile areas are in terms of where a lot of trade has occurred in the past. So chances are we'll probably see at least the gap filling and potentially coming back to where that volume profile area is there. Because everyone's all over exuberant and going, oh, wow, we've got to grab as much as we possibly can right now. And caution is being thrown to the wind.
Mm-hmm.
That will most likely be the situation as to what's happening there. If you haven't grabbed it by down round here, you're probably way too late to the party.
I
Okay.
agree.
Or at least looking in terms of, say, like having oil stocks or something along those lines already at this stage. If you haven't grabbed something in terms of some inexpensive options or something along those lines by now, perhaps look somewhere else. Don't worry about getting caught up in FOMO right now, would probably be the best way of thinking. That's Brent crude. The dollar, we've been looking at the dollar already. That's breaking out already, as we can see as well, well above all of those moving averages, like we mentioned midway through last week, and even more before that as well too. We were just
Mm-hmm.
breaking out all the way above all of those moving averages and above the VWAP and everything along those lines too. Okay, so that's already breaking out, contrary to what the media's been saying in terms of the dollar falling apart. So forget about all of those.
Yeah.
Now, why is all of this important overall there? The bonds themselves are starting to collapse back downwards. Bonds going down, yields going back up. So we'll go through that quickly. Bonds down, yields going back up. Yields going back up above the 100-day moving average, back up above, or testing now, I suppose, the 150-day moving average. So
Mm-hmm.
yields are going to be an interesting thing to keep an eye on. And the yields in particular, very interesting in relation to the Russell overall, as we always say, because they're very sensitive to interest rates. The Russell, as well as all the other indices, have been flailing around and falling apart below the short-term moving averages.
Mm.
So we can go through all of those if we really want to. I'm going to do it very, very briefly because we've been discussing this in midweek all the way through everything as well too. So when we think about all of these, we've basically had all of these falling apart in terms of the indices. Dow Jones being one of them, We'll go up quickly to the SPY just to quickly show that. I don't want to harp on this too much because we've been discussing it recently. The SPY and also the Qs. So
Mm.
overall, they're all starting to struggle quite a fair bit. And on top of that as well, really going down more than anything towards the longer term moving averages. It looks as though even from this way, when you think about this, probably the tech is actually starting to get a little bit stronger compared to a lot of the others, which is very, very interesting on a relative basis.
Mm.
But these kind of things overall have really had an impact on your favorite when we take a look at things overall in relation to good old
Crypto.
Bitcoin and crypto. Okay. Now, I'm going to enlarge this because you picked up on it quite a lot in terms of your Fibonacci levels. Now, a lot of people might look at Fibonacci and go, "Ooh, not too sure about all this kind of stuff in terms of the Fibonacci calculations and everything there." And that's quite okay.
Mm.
If you're not too familiar with doing Fibonacci levels and so on like that, just stick to basic, simple support and resistance. Okay?
Mm-hmm.
Really, really simple on a comparative basis to Fibonacci's. The really, really big support and resistance line of very, very high interest in relation to things this week was a support and resistance level from back in 2024, the March one. We were talking about this even last week as well too, or the May one we were talking about last week actually. But the March one, which is the one at 73,100, was actually hit on Wednesday of last week when everything was starting to rise and really rose quite well. It got hit and then it got rejected on Thursday. Very similar to your Fibonacci levels. They got hit and rejected as well about that same time. Fell back, it kept on falling back, and then fell beneath the short-term moving averages as well. And it's just been keeping on falling ever since. It fell back below that support line back from May 24 as well, that one back at 69,300. And then it's just kept on going here. Now, it looked as though it might have had some reprieve and it might have actually started to actually improve because you can take a look on the top left-hand side of the EMA 15s and the 8s.
Mm.
It still hadn't fallen beneath in terms of the crossover back under in terms of the EMA 8 and 15. Because the EMA 8 was actually still above the 15. But today, it's fallen below.
Mm-hmm.
And that in itself would be a sign and a trigger for a lot of traders to basically say, okay, this trade in the short-term basis is done.
Mm.
And on top of that as well now, it's now basically testing another level right now, and you can see it on the blue right on the right-hand side there of 66,021. Currently testing that right now as we speak, and you can see it. It's just crossed against it right now again. We're hitting 66,000 even.
Mm-hmm.
So these things are actually right now live, right now at this point in time, 10:45 here in Australian time at this time right now, or if we look at it there, 7:45 over in New York time.
Mm.
So this is exactly what's going on at this point in time. We're currently testing that 66,021 level. So overall, short-term basis, it is actually quite weak.
Mm.
That's the story with Bitcoin, which is currently the leader, as we know, on a comparative basis, because you're looking at your Ethereum Bitcoin ratio. And that is pretty much about all of the kind of things that we're basically covering here on this channel. So it really does come down to, like we've been discussing over the last few weeks, really checking those levels, having a look at the levels, seeing how they work with your plan. If you don't have a plan, why don't you have a plan? It
Mm-hmm.
really does come down to that overall. It does not matter whether you're an aggressive, conservative, or a long-term investor. You need to have a plan no matter what the circumstance is. For example, I was short-term investing myself in Bitcoin and Ethereum. It changed. You can see the change that occurred there. Those positions are gone in terms of the short-term plan there itself. They've
Mm-hmm.
hit, they're out. The IBIT trade that I'm basically in, though, that was essentially hedged. I
Mm-hmm.
managed to actually get my initial investment out of those. I can just basically sit there and let that go.
Mm-hmm.
So there's different ways you can basically manage these positions in there as long as you have a plan and a trade to be able to actually work with it.
This week is definitely a lot about oil. Oil has pretty
Mm.
much outshined everything in the markets. We've seen the other indicators, the Russell and whatnot, and they are just not looking great. Crypto is starting to stabilize, in my opinion, and I personally think that's a very interesting piece of news considering war tensions have just increased. So there is something over there that we'll continue to report back to you. But other than that, Thank you so much for watching our video today. If you really liked anything, please give us a like or a comment as to what we can do better or what is something that you're liking about us. And if you can, subscribe. That would be great. But with that being said, thank you so much for joining us today, and we'll see you next time.
Absolutely. All the best out there, guys, too. And yeah, don't be afraid to put a comment down there about what you want covered. That is the most important thing as well. Let us know because we'd love to be able to cover everything that you're interested in.